Good Monday morning. It's not Halloween yet, but we won't have another chance to scare everybody out there. Because everything's so scary right now that I thought I'd better put on my true self, the witch. And Dennis Nelson's going to join us today, and then Marcus Bickle. John Kincaid has it off for today. We're going to talk about a few fun and exciting things. I have my broom. I will fly out of here when I'm finished. You can all witness that. I hope you enjoy this, because I'm not doing this every day. Anyway.
It's exciting to be here next to a witch.
Well, you've been next to one for quite a while.
for years.
Yeah, and you know what's fun? I get to mess my hair all up and everything. And Kendi just happened to have this, believe this or not, she had this witch cloak in her car. I'm like, who does that? I guess she might need it at any minute.
Well, I think we need to worry about her.
I think so too. And Dennis, I see you're dressed as the checkerboard man.
Or the investment advisor.
Oh, what a good look for you. I love it. He's got in his Warren Buffett Oracle look today.
Yeah, and I thought that Halloween was going to be next Monday for
But I think that's after Halloween, right?
Yes.
Next Monday's the 1st, I believe.
Yes.
Today is the
I think it
26th,
is.
in case anybody wants to know. And I dare anybody to put this out and make it go viral. Investment advisors, true selves. Anyway, I'm going to talk about a few things, news you can use, especially right now with tax issues all up in the air. I want to talk about charities. This year only, you're allowed, no matter if you itemize or not, to take a $300 charitable donation. So you can add that on. If you can only do the standard deduction, you can still donate $300 to a charity and write it off. Otherwise, you have to be able to itemize. So bunching this year might be a good idea if you want to bunch up things in 1 year so that you can get over your itemized deduction, over your standard deduction. So that would mean if you're a couple and it's like 24,400, I think. You want to get over that amount, you might donate more this year so you can itemize, and then maybe for the next few years you don't donate and you just take your standard deduction. By the way, my fingernails are black too, seeping in. Anyway.
It's scary.
It is scary, right? If I start getting black teeth, you better worry. Capital gains, we know the possibility that next year capital gains could be taxed as high as 40% if you have over $1 million in gains. I know that sounds like a huge number, but it's really not. So you might want to think about how you want to handle your capital gains. Some people are actually thinking of rolling their IRAs into Roths this year because, again, they're worried about the higher income tax rate going forward. Something everybody might want to think about. Talk to your CPAs about them. Let them run some numbers for you. See how much that's going to increase your taxes, what tax bracket it'll push you up into, and how much you need to give away to charity to make up for that. We can make it work.
Yep. Well, some of the unknowns are going to be
My magic wand.
Are going to be knowns here in another week and a half.
Right. I'm going to make it work with my magic wand.
Okay.
We can do that here. We're good at that.
You are good with magic.
I am. I can fix almost anything. IRAs, even if you're not taking your required minimum distribution yet, which most of you know you now no longer have to take into your 72, unless you've already started at 70 and a half. But if you're 72 and you want to give away the required minimum distribution this year, you can still do it even though you haven't started taking it yet. Just can't be more than $100,000, and you have to be between age 70 and a half and 72 or older. So that's another good way. And I have so much on tax, I'm sorry, Dennis. But the other thing is, if you didn't have to take a required minimum distribution this year. Some people did, and then you were allowed to put it back even over the 60-day period. However, as of August 31st, you can no longer put it back. So don't try. You could be in trouble, and so will we. Another good thing about donating this year only is if you give a cash donation check to a charity, directly to a charity, not to your foundation, not to a donor advised fund, you can write off 100% of that on your AGI, or adjusted gross income. Usually it's only 60%, so that's a big deal for this year only.
I guess it is. I'm excited over that.
I know, it's a one-time deal. So I talked about rolling, again with stocks, if you want to donate them to a charity this year, maybe that, I guess I'm thinking maybe that might be a better thing to do next year, because if the capital gains rate's going to go up, you'll have more advantage donating it next year. but don't tell any charities I said that, okay? That's, okay. So, I'm sorry, that was an awful lot of tax and charity information, but this is the time of the year you'll have to sit down, look at your taxes, talk to us, talk to your CPAs, and find out what you can do to minimize taxes. Taxes are not you don't have to pay them if there's a way to not pay them, right? I mean,
Right.
if they give you a way to not pay them, why not take advantage of that?
If it's a law, why not?
Right, I mean, otherwise it wouldn't be there.
Right.
So don't pay more tax than you need to, bottom line. Dennis, what have you got for us?
Well, talking about taxes are really exciting, and I've got something also exciting to talk about, and that's dividends. You know, with a 10-year treasury at 0.8%, can you imagine locking up money for 10 years for 0.8%? That's the value of the liquidity of not putting it in treasuries, to me, is worth more than 0.8%.
Well, yeah.
Does that make sense?
Yeah, it does.
But there's lots of stocks out there that yield more than 0.8%, and some of them a lot more. You got to be a little careful. You certainly don't want to get involved in a company that has questionable cash flows going out in the future, because they may come and get those dividends, and you'll end up with no dividends going forward. And there's a couple categories that I think are definitely suspect for dividend decreases going forward. Energy stocks head the list. The banks may end up getting in trouble. There's going to be a lot of bankruptcies and a lot of claims on their cash flow, and the banks may look at their dividends as a way of increasing their cash flow to pay for some of this. Nonetheless, lots of good stocks out there. Johnson & Johnson, 2.78%. We're looking at Pfizer at almost 4%. Microsoft, just a little more than 1%. Still, that beats the 0.8% that treasuries are paying. Qualcomm, 2%. Verizon, 4%. And McDonald's, 2.25%. I'm not necessarily recommending these stocks, but you know, these are some suspects to take a look at for potential cash flow that's a whole lot better than you can get at the bank or in treasuries.
Well, the bottom line is you can't live on principal or capital gains alone. If you go with a treasury at 0.8%, you know you're spending more than that. You're going to spend principal. It's a guaranteed loss. And then on the other hand, can you really depend on capital gains? If that'd be great if we could all do that at the lower rate. You can't do it. So you have to find a middle area. Some capital gains, some nice high dividend paying stocks, and maybe a little bit over here in a protected treasury or some kind of guaranteed environment.
Yeah. The bottom line, income is tough to get right now. Fortunately, we have a way of producing more income off of stocks than just the dividend they pay. But it's certainly worth looking at the cash flow that you can get from the stock, whether it's our method or whether it's by dividends. Just remember, the stock's got to be a good one.
Our method's great. It's double income. Really good. Speaking of income, I got my first Social Security check on Friday.
How did that feel?
Woohoo! I was like, I never thought I'd live long enough, but I did. So I'm really happy about that.
And there I was, waiting for you.
I know. All right. So now with a magic whoosh, we're going to bring Marcus on.
Okay.
Okay. Ready? And poof! I turn him into Marcus. Look, even has the same checkered blue shirt on.
Yeah.
How good is that?
He is
Hello,
younger
everyone.
looking than I am.
And look, he's got this great look going here. I'm not sure, it's, what is it?
Younger portfolio manager?
Younger portfolio manager, right? Yeah, you know, I don't know why they're not into this whole costume thing. Go ahead.
Well, so I just have a couple things real quick. Some kind of interesting financial news. Dunkin' Donuts is in the news today because they might possibly be going private.
A private company wants to buy them.
Yeah, which would be taking
right?
the entire thing private, I believe.
Right.
So they're looking at about a 20% premium on the current price of the stock. So it's jumped accordingly. So we're kind of watching that. That's not something we currently own, but it is interesting. Restaurants have been been kind of a weird area in this market. But fast food specifically has done well, especially if you look at like McDonald's posted a record quarter, despite
Wow.
most of their stores being closed.
And we do still eat donuts. I mean, it's pretty easy to get your donuts. Most of them all have a drive-through.
Oh, absolutely. And
Yeah.
then lines out the door, or well, lines out the drive-through, I guess.
Right. Well, that's kind of interesting.
Yeah, and the other thing that kind of came across the radar, well, it's a continuing thing, is Brexit. Now, for those of you who don't know what Brexit is, it's kind of a quick abbreviation for the British exit from the European Union.
That makes sense. Brexit, British exit from the European Union. That helps me a lot. Thank you. I will remember it.
Absolutely. Now, this has been going on for years, and I'm sure many of you have heard about it, at least in passing. The most recent Prime Minister, Boris Johnson, ran specifically on kind of pushing Brexit through, and it's gone through. The referendum is complete. Now the only thing left to do is for it to actually happen, for them to exit the European Union, and that poses some interesting issues with trade, immigration, because right now with the European Union, if you are a member, anything that happens within the European Union does not require
Passport.
Yeah, passport. There's no borders to cross.
But
So
the money's still different.
for Britain specifically, yes. Most of the other European Union uses obviously their currency as well. But most recently, and the big fear has been if Britain were to crash out of the European Union without an agreement for trade and various other things. It was looking a little dicey as of last week, but they're continuing to talk. I think the big issue has been and has always been international fishing rights, surprisingly.
That's a good one.
The British Isles are, I guess, a very fertile fishing ground for a lot of fish, and they were having issues with European, EU fishermen coming north and kind of poaching these fishing grounds. It was a big sticking issue for a lot of people over there. At least that's what I've read.
Well, you know, it's taken as long for Brexit to happen as it has for us to get a second stimulus package, I think.
It feels like it. An
It's
eternity.
taken forever. So anyway, it's really scary out there between elections and markets, but fear not. After November 3rd, we'll all know what to expect, and things will go back to business as usual. This is the Naples Money Managers, but remember, most of all and most importantly, you matter.